Okay, so digging in on Linus, the first thing I want to talk about is how the Kalgoorlie processing facility is coming along. So they touched on in their announcement today that they'd had external pressure put on them by the government of Malaysia, which has, been well trodden out in the media. So the initial cost for this one was $500 million. Now they flag in the announcement today $730 million. But I'd question that $730 million number. So they talk about another $50 million in pre-commissioning costs incurred prior to first production that will be capitalised.
So if you're capitalising OPEX, mate, I'm pretty sure that's CapEx.
Why is the figure not in the CapEx?
Right, let's get on to Red5.
There's one number I really, really, really wanted to look at that I normally don't bother ever checking for mining companies, to be honest with you. I just sort of assume it's going to be okay in ordinary course of business. But in this case, the number that I wanted to check first, it's a number on the balance sheet of the financial accounts. The trade and other payables, it's $64 million. But my question mark is $64 million, is that like a reasonable number to have?
Righto, Money Miners, welcome to day 2 in West. I won't say JD.
It's Emerald House.
Emerald House.
Emerald House.
Not
That's the name of the building.
1202.
Yeah, thanks, Harriet, for the correction. Appreciate that.
She is expecting one mention per episode, so she's got 2 in a row today. We're fulfilling our lease agreement.
We'll have to let her do the intro one day to get 3 out of 3, mate. Tomorrow she can do the intro. Yeah.
Wasn't Struth supposed to do the intro today?
Brodes.
Brodes, yeah.
Struth could do the intro from out there.
It's not too late. I can call Brodes in.
It'd be rude not to.
All right. I'll be right
Let's
back.
do a celebrity one. JD, how are you today, sunshine?
I'm doing well, mate. Jesus.
That's the go. Bloody mate, yesterday's episode, cracker.
It was.
3,000 views within the first 24 hours and climbing.
And climbing. Well, there's a few good stories, right?
Maybe it was...
Some hot names, some controversial things, which I think people were sort of expecting us to give a take on.
Yes. It was
We
bloody...
had, you had Siona, which, we're just going off the Twitter action in the morning.
Gets your loins tingling a bit, doesn't it, JD?
People wanted to hear what we had to say, which is nice.
Righto, Trav, he's rustled up another intro. What would you call him? Partner. Partner of the show.
Quite a fitting word.
Partner of the show. Now, Brodes, this is Brodie, everyone. Maybe, it's obviously not JD's partner because we've seen her before.
She got a guest appearance g'day as well.
Struth has sort of set the benchmark as the one and only partner that's done an intro so far. Brodes, what have you got for us to introduce today's show to the Money Miners? Now, you can't talk from there. You got to get your gob nice and bloody close to it. Come on, Brodes, give it to it. Today is Tuesday, 29th of August.
Just give it your best. G'day, Money Miners.
And we're talking about mining.
Right.
Rip it.
All right.
We're hanging in suspense, by the way.
All right. Go on, Money Miners. What have we got going on today?
Gone? What'd she say? Gone, Money Miners?
You always say it's like, go.
G'day. G'day, Money Miners.
All right, let me go again. Round 2. Okay. Wait, g'day. Okay. G'day, Money Miners. What have we got going on today?
That was good.
That was good.
That was good.
That was
I
good.
liked it. Well done, Brodes.
Struth did expand a bit, but look, hey, happy to come in and try again one day. That was good energy. I'll give you 10 out of 10
I'll
for
keep
energy there, Brodes.
practicing in the bathroom for my next debut.
Gone from people in the public have gone from singing in showers to reciting the Money Mine intro and practicing just to try and get that $500 bait.
That's the influence you're having, Maddie.
Very good.
Stuff,
Thank you, mate. Have a good
Thank
day.
you.
Not a bad effort. As I said, good energy. Struth sort of expanded a bit more, but we're happy to do a round 2 improvement. Struth versus Brodie.
7 out of 10.
Intro competition.
Yeah.
Coming up. I like it. Righto, boys. What do we got installed today? Mining news for the Money Miners. What do we got?
We've got a couple. We're going to play a snippet from the Fortescue investor call yesterday. There was an interesting sort of pointed question that we want to touch on. And we've also got a bit of a dive on Linus. And Red5 came out with their full year results. And you're going to give us a bit of a spiel on Hillgrove as well.
Took a look into that. A bit of an underground in development copper jobby in South Australia.
They're looking to be producing.
Will they make money?
In about half a year, they want to be producing already. And I think that rounds us out.
I got a gripe to pick with Linus, mate, so stay tuned.
Yes. No positive. There's it's lower percentage of positive news, I'd say. we have had some positive episodes, 100% positive. It was a bit out of character for us.
Yeah, I couldn't sleep that night.
Get cold sweats and shit. Very good. Righto, today's partners. We'd like to call them partners. And look, these two companies I probably would be partners with some of the men in these companies. K-Drill, Ron O'Sullivan, spearheading the attack of K-Drill, finding ore in the ground. Exciting times for K-Drill.
Well, last ad, he was finding it with his bare hands. Has he graduated to being able to do that with his eyes closed now? Or are you one-upping every ad, Matty?
Look, it's like, I see it like probably playing golf. You know, he might be able to just have one beer and get to that optimum ore finding point, because, when you have one beer at golf and you get better, like I think he's probably Ryan doesn't drink on site.
No.
No,
all above board.
all above board.
But he doesn't need to find the ore or the deposit. It just
He'd
happens.
probably find a case of beer next to it as well. He's just got that sort of luck. So, K-Drill, thanks for your support, and our other my bromancers at Terra Capital, Langers and Bondi. Tomorrow, Terra are coming to the forefront of Money of Mine.
Yeah, we've got Dylan Kelly coming on the show, one of the analysts there at Terra, to talk all things rare earths.
Yes.
I'm really excited for that one.
That's going to be a bloody spectacular. I'm keen to get into, really delve into the myth of clays.
I'm keen to meet Dylan. I haven't had a yarn with him yet, but I'm keen. I'm just keen to have a chat with him.
Bloody. Oh, yeah, because I have. That was on my little Sydney gallivanting roadshow.
Yeah, okay. So you met Dylan. Oh, well, that's exciting. At least one of us knows what he's like.
He's a GC. That's all you need to know.
I assume so. If he's part of the Terra team, he would be 100% a GC.
Mate, he's in that territory, you'd say.
The territory.
Righto, boys. FMG, highlights from the call yesterday. JD, how did it come across? Because we did a bit of a, first pass on the leadership change of Fiona Hick, the CEO, departing from after less than 6 months.
We did, mate. It made a few waves yesterday. 10th executive to leave within 3 years isn't something you really want to be claiming too loudly. So we tuned into the investor call, Matty, and there was a question from Paul Young from Goldman Sachs that I want to actually play out now for the money miners to hear.
Your next question comes from Paul Young with Goldman Sachs. Please go ahead.
Good morning, Mark, Dino, and Christine. Just an FYI that we've had 30 minutes to digest these results, and the full set of accounts don't appear to be out yet, by the way. Mark, I know that with respect to Fiona's departure, I hear your explanation, but I do think shareholders deserve a better explanation, seeing as that she's departed with only up to 5 months in the role, and also considering the C-suite changes in the past 2 or 3 years. So the stock's down 6%, by the way, and I just think that shareholders need a better explanation. Dino, first question for you is on your appointment, and where you think the company could improve. What changes would you like to make, and particularly any changes to strategy and projects?
Well, that question was, the extra colour that we were looking for.
Yeah, it was pretty pointed. So there'd been some probing questions prior to that one, and the company really wasn't budging. They weren't giving any additional information.
Well, the questions before that didn't feel that probing, to be fair. They mostly started out with congratulations on the promotion, Dino, which is like such a bizarre statement to make, by the way.
Yeah, it is part and parcel for an analyst call, though.
Yeah, there's always that introductory compliment followed by what the actual bloody question is.
Yeah, well, at least Paul didn't dance around it. He was sort of straight to the point and asking, what everyone's thinking, right?
Exactly. So there's over 100,000 shareholders that haven't exactly been treated like shareholders of the business yesterday, going off, the information that they have been provided. And I bet that Dino wasn't exactly expecting a question like he's come up to a job interview like he was pitched there. But I just think it sort of ties in with one of our broader thematics, which is wanting shareholders to be treated like shareholders. And, you can't be too critical of Fortescue's performance over their history. They've got a great track record of generating returns for their shareholders. I just think on this one, they didn't provide quite enough colour as they probably ought to for the shareholders of the business.
Did the AFR listen to you yesterday by any chance, JD? I think them.
Well, we did pick up that they changed the headline that their Fortescue's revolving door was a joke. So if you check that one again, that's no longer there. So
What is it now? Fortescue's revolving door
must stop.
Must stop.
Yeah, so read into that what you will.
Yeah, wait, they'll be quoting us soon, don't you worry. Haven't come a long way in 4 months.
I'm sure they will.
Let's get on to Red5.
Yeah, so
Annual
we've-
results out today.
That's it. Annual results. So we'll just hit the headlines quickly. 165,000 ounces of gold, 4.25 million tonnes processed at an average head grade of 1.31 grams per tonne. So they're coming off the back of 4 months of consecutive record production from March to June. And that processing plant at King of the Hills is now operating at 5.5 million tonnes per annum. So the company quotes that as being 38% above nameplate capacity. So all that said, for the year, they had a net loss of $8.7 million. Now, let's look forward. FY24 production guidance using the midpoints is 205,000 ounces at an all-in sustaining cost of $19.75. That's a pretty high.
They're the midpoints, are they?
Yeah, they're the midpoints. So that's a pretty high all-in sustaining cost, especially when you take into account that 40% of their production over the next 3 years, so that's roughly 100,000 ounces in each of the next 3 years, is hedged at slightly over Aussie 2,500. Now remember, your all-in sustaining cost isn't really the cost of running the business in its entirety. They've also got the Darlow project as well, but costs are always higher than that all-in sustaining cost, so they're pretty thin margins. So they guided growth capital to being between $40 and $46 million. Now, I want to tuck into the debt. They've got $175 million in debt.
That's with Macquarie, right? And that's tied to the hedge book as well.
Yeah, there were three lenders involved, Macquarie being one of them, and they started making repayments on that debt in December of 2022, so 9 odd months ago. A bit of that has been paid back. They're now at $128 million remaining, and they said over FY24 that around $23 to $24 million in debt repayments will come due. So they've also discussed wanting to refinance that debt and move away from the constraints that they have from their current project financing facility. Now, what they're looking at
Constraints. What does constraints mean? Is it
constraints
the debt
means
covenants?
it means they're not operating at a profitable enough margin to like you say, meet the debt requirements and meet any growth capital and other.
There's usually baked into these facilities. There's a bunch of debt covenants like coverage rail, reserve tail ratio.
There always is.
Like sometimes there's a minimum mandatory cash balance.
Yeah.
These sorts of things which are restrictions.
Yeah, so
because that minimum, or you might go into it, because their minimum cash balance, I think it's $7.5 million, is it?
Yeah, and I mean, that's a pretty low cash balance to have for a company like them.
Sort of close to where they are.
What they're looking at, transitioning that to is a corporate facility that would, have at the end of a 3 or a 5 year period a bullet payment due, and it wouldn't have such, onerous conditions on it. So let's look into how the company has sort of managed their finances over the past year or so. They've raised $152 million in additional equity. So that's not touching on the debt that we just mentioned. So that came, 60 odd million placement and a $9 million share purchase plan.
Both of those came after being declared fully funded, by the way.
That is something we fleshed out a little while ago, isn't it?
Highlighting both.
Yeah. And then they had another $80 million placement and another $10 million share purchase plan in March of this year. So looking at where they are right now, they've got $20 million in cash, $26 million in bullion and restricted cash. And I want to hone in on that bullion and restricted cash because that's, it can be somewhat misleading or lead to a few more question marks, right? So honing in on that, they got 16 million in restricted cash and bullion receivable. So in the waterfall chart, they just say bullion, not bullion receivable. Trav, you had a couple thoughts on this.
It's like the waterfall chart went too long. It should have been cut off 2 bars before.
Yeah, but it did have a subtotal there, granted. But I think it's about telling the story that cash is going up, and the way you do that is bolt on a couple of extra or an extra bar. In this case, I don't think you should be including bullion receivable or restricted cash because for the purposes of look, what you really want to know is like how fine are they cutting it. I wouldn't be including either of them because restricted cash you can't use and bullion receivable. I mean, it's like if you look at their balance sheet, there's no there's basically no indication that they have actual bullion on hand. This is a receivable, so it's basically, my understanding of this item is it's just, they've delivered bullion waiting for payment to come in the door. But you kind of can't include receivables and not include, your payables. The two kind of go hand to hand, hand in hand. They're not part of the equation as I sort of see it. And I'm going to dive into the part of that equation, which I think, was really on my mind, because when I saw the results or these accounts out from Red5 today, there's one number I really, really, really wanted to look at that I normally don't bother ever checking for mining companies, to be honest with you. I just sort of assume it's going to be okay in ordinary course of business. But in this case, the number that I wanted to check first, it's a number on the balance sheet of the financial accounts, the trade and other payables figure, which is baked into the current liabilities section. You might be wondering, why do I care about this number for Red?
I'm wondering, trust me.
It's because Red5, they surprised the market in February this year when they had that, the $90 million equity raising. And they surprised the market because I think a lot of the market kind of thought they would get through. Production was ramping up. Maybe they'd get through, but they raised $90 million, which is a massive equity raise. And a huge portion of the use of funds of that equity raise was to pay down its creditors list. So trade creditors, it was to pay down trade creditors. And the trade creditors at that point in time, it had climbed up to about $80 million. They measured that as an unaudited number for 31 December.
So
$80 million.
Who's a trade creditor? Trav, people that built the mine,
anyone that they owe money to. So you can think about it as there would have been some construction creditors baked into their mining contractors.
The mining contractors, the people who build
mining
the mill,
contractors, people who build the
haulage,
mill.
etc. So anyone that's giving them an invoice, that's what's been invoiced but not yet paid. Yeah. And that number had climbed up to $80 million. A huge portion of the $90 million was to pay down some of that. So anytime I look at I'm almost not trusting of Red5 because they surprised the market on that number in the past. And I'm almost it's like PTSD. I don't want to get caught off guard when just in case there's an equity raise that's required to pay down trade creditors again. So I'm looking at this number and the first what is the number on Red5's trade and other payables at 30 June in these statements? It's $64 million. There's some more colour in the notes section of these accounts saying that these payables are ordinarily settled between 15 and 45 days. And granted, it's been longer than that since the 30th of June. But my question mark is $64 million, is that like a reasonable number to have? And I actually don't know the answer to that question, right? $64 million payable to trade, for trade and payables.
So you're saying, I guess it was 80. They did a raise to pay a lot of these creditors.
Yeah, I think
and now
30 million in the use of funds is to pay down. And
it's only gone down by 16 million.
Well, the 64 million is actually pretty comparable to what it was 12 months ago in June last year. But June last year, it would have captured a lot of the construction parts. I mean, they were building a mill, right? And they had to pay all of the EPC and all that sort of stuff that was building the mill. I don't think there's much of that should still be owing. So I imagine a lot of this payables is in relation to their mining contractors. And so in order to assess the question I have in my head, is that a reasonable number or is it unreasonably large? I wanted to comp it against some comparable open pit miners out there. So I looked at the list of open pit miners, single asset miners in Western Australia who had a similar mining throughput on an attributable basis, because in my mind, a big driver of your cost is actually the throughput. And if you're doing open pit mining, maybe they're actually comparable companies. So Capricorn, they've got Karlawinda, which is a 4 to 5 million tonne per annum mill. Gold Road, their 50% attributable component of Gruyere gets them about 5 million tonnes per annum.
Yep.
And then Red5, King of the Hills, they're sort of now calling that a 5.5 million tonne per annum plant. So they're all comparable from a throughput basis, right? So, granted, my analysis doesn't take into account strip ratio or anything like that, but let's look at those three companies. What is their trade payables figure in their latest reported, half year or full year accounts? Capricorn at 31 December, $22 million. Gold Road, 30th of June, 35 million bucks. Red5, 30th of June, 64 million bucks. So it does feel on the high end.
I suppose you can say if you compared Red to Capricorn directly, Red they do have the underground contracts as well, and Capricorn is all free dig at the moment. I'm still pretty sure. So I suppose you can compare that, but based on a pure throughput rate, yes, a lot higher.
Yeah. It's a similar number that they have to what both Ramelius and Westgold have. And keep in mind, Westgold's got 3 plants, so you'd expect a higher trade payables, and Ramelius has 2, and they're hauling a lot further. So yeah, I mean, I don't know. I just can't bring myself to trust Red5 yet. I hope I can, and but I'm always just my cynicism is sort of wanting to dive into the detail because I can't trust them.
It's just like there's that fear that there could be a raise pop up at some point because they're on the it's still cutting it very fine.
20 million bucks cash, in 64
when you need minimum
million.
7.5.
Yeah, it's fine, right? It's cutting it fine. Yeah.
I think the broader point is super valid. If you've been looking at the balance sheet and you're really focused on that debt aspect, and then you get stung by that, trade payables aspect, you're naturally going to look at that and keep a close eye on that going forward to make sure you don't get stung again.
Yeah, and the comment from the investor call was that going forward, and you can see it in their guidance, and you look at what they produced 101,000 ounces in half 2. That was obviously because they were still going through the ramp up. They did indicate that they expect that half 2 performance to be an indication of the whole of FY24, but ounces is all well and good. It's the margin on it that's going to be needed to, pay off these creditors and give them a bit more breathing room than they have right now, which is the big thing. So,
and on that investor, it's worth pointing out on that investor call, the sentiment was, a lot more bullish coming from management than you've heard in a long time. So it's my cynicism that I'll question every number, and rightfully so because fully funded. Come on.
But the issue with Red5 historically was probably a lack of transparency with the numbers in the lead up, and which was expressed in a lot of the research that they weren't fully open about everything.
Well, they raised that 90 million bucks in February. At that point, their half year accounts ending 31 December disclosing that $80 million hadn't come out yet. So the market is still looking at their half-year accounts that ended 30th of June in February. That's a long time, and there's just it's not necessarily Red5's fault. It's kind of just the context of the reporting criteria that we have. But yeah.
Look, I'm rooting for them. I just hope that the operations can deliver a bit of margin and they don't have to raise again. I'm pretty sure they want the same. But yeah, look, it's just if you're talking investment risk, but whether you want to take it or not. Ramelius boys, they're finally over the hurdle. 55% now ownership of Musgrave. They went unconditional yesterday, so I think this saw a lot of funds vote. And they picked up nearly 7.5% yesterday to get them over the line. So a big jump from their notice yesterday. So not much more to report there, but Ramelius now have the majority ownership of Musgrave.
Let's get into Hillgrove, mate. This is an interesting one.
Yes, Hillgrove. They did put out yesterday some drill hits, some step-out drill hits outside their resource. They're in development. Another story coming up that we're going to be keeping a close eye on to see if they deliver.
Yeah, so that hit was about 45 metres at 1.2% copper. It's a 100-metre step-out hole from Kavanagh.
Yeah, you covered it a bit not long ago, didn't you, JD? The Canman 2 copper mine in South Australia, 55 k's from Adelaide. Beautiful part of the world.
That's right.
It's very good. If you're an underground miner, JD, you'd be residential there, mate. That is right up your alley, that joint.
That's one of the big attractions for this. You don't have to do fly in, fly out if you're working at this one, and the company is rightly strong to advertise that point. So they've got they made their final investment decision and announced that they're fully funded a couple months back now. And unlike Red5 and what we just spoke about, they're doing this without debt. So you had a look into the underground development. This started in May of this year, and they're getting a second jumbo in at the end of the year.
Yeah,
so
they're scheduled for first copper concentrate production Q3 FY24, so start of next year.
Yep.
They've got Freepoint. They're a 20% shareholders. They're a US commodity trader. They seem to come on board in like 2015 with them. I think they provided them with a debt facility to secure the life of mine offtake. They've obviously got some hedge. They've got some 16,000 tonnes of concentrate hedged with them as well.
Yeah, to your point with Freepoint coming on, they didn't come on as equity investors at that point.
They had a hedge facility, but the recent how they've financed this. Freepoint participated to get.
Yeah, they took
17
million odd from the roughly $38 million placement that the company did a few months back.
So I think that's 16,000 tonne of copper in concentrate that they're hedged for. So they've got it's an interesting one that stands out. So they've got currently they did an updated economic study. They've got a 4-year mine life. It's at a run rate of 1.4 million tonne per annum, but the mill, it's an existing mill on care and maintenance. Pretty low restart cost, but the mill has a capacity of 3.6 million tonnes. So, look, any exploration upside and additional tonnes is a good thing, but they're never going to be able to fill that mill. So, I guess why is that an issue? We have heard it pop up a bit with these existing mills and the new mines not suiting the mill. So, because if you run the mill at a significantly lower throughput rate to its capacity, you've got the fixed costs, and you will significantly increase the processing cost per tonne. You can this can lead to you can get a higher recovery because you can lower the throughput, get a finer grind, leave it in the circuit for a bit longer, and get a higher recovery. But will that offset the higher processing costs? It's something that Gascoigne have getting questioned about.
Yeah,
constantly.
exactly. So what the company says here is that they'll operate it on a campaign basis, so on off, whether that's 1 week on, 1 week off. We'll sort of see.
Yeah, so I think they're saying it's 40% utilised. It does give you a bit of flexibility there, but they did because they quoted. If you look at their costs in their update, their economic assessment, they said $13 a tonne for the processing costs. Historically, they got $8 to $9 a tonne in the open pit, so it's 13 obviously reflects the campaigning basis and the lower throughput, but will they be able to achieve that in this inflationary environment? Especially they got $47 a tonne for the mining costs, so it's one of those wait and see ones to see how they're going to deliver on this.
Yeah, so they reflect an all-in sustaining cost of a bit over US $2.50 per pound, and I think we're roughly at $3.80.
And that'd be helped with a gold kicker, wouldn't it? Because they got some gold they're ripping out as well.
They get a byproduct credit.
Yeah.
Yep.
So look, it's not a knockout grade. Like it's just above 1% for the resource. It's all underground. I think they did mention that they do have the ability to make wider stopes, and to increase the throughput, but that significantly drops the grade.
Yeah, it'd be interesting to see if they can match that mining cost of $47 a tonne and the processing cost of about $13 a tonne. In actual fact, we've seen a lot of chatter lately about Liontown and the study costs versus what people are actually anticipating. A lot of analysts have been revising that up. So given that these guys should be pouring first concentrate in within 6 months now, would be one we closely watch to see if that they can match those costs.
Well, didn't we comment on, I think the update, what were the updated underlying unit costs that I think Jarden were predicting for Kathleen Valley was $130 a tonne, and take out, I think they then said if you remove the sustaining capex from that, it'll settle at about $100 per tonne. So,
and that was on 45, I believe, dollars per tonne initially flagged by the company.
Yeah, so you've seen their unit operating cost per tonne double. Will Hillgrove be able to keep theirs down at 45, and you'd expect the same? You'd expect a similar multiplier possibly on the processing cost as well. So Kathleen Valley are fly in, fly out. These guys are residential. It's not a like-for-like comparison, but when you're mining 1% copper underground, underfilling a mill in a high inflationary environment, it'll be just one of those ones to watch on ramp up if they can deliver the goods, you'd say.
Yeah, just like Red5, it's another one of those ones that needs everything to go right.
Yeah, and I don't want to be bloody negative Nancy. I want to see these projects bloody, I want to see them achieve. I want to see them win. I want to see them make money. But it's
Agreed, mate.
it's a tough bloody gig out there. I found it interesting that they got given a $2 million grant to use a continuous miner to develop the decline. You'll see.
Yeah, we'll chuck up a pic of that one.
Yeah, because you
Pretty
see it's
funky.
all, but it's obviously, and then they had like a thin sprayed coating for the ground support, but I think they did comment that it was slower. So, it looks all flash, neat and tidy, but the actual development rate is much slower than drill and blast. You just want to get bloody in there. Who cares? Like, you can make it look pretty bloody neat without having to go down this road.
Righto.
Righto, JD, how'd you like it in the middle today, Cobber?
Oh, it's interesting. A lot of head twisting, but we'll get there.
We're just trying to mix up bloody sit and figure out the optimum bloody position.
We're finding our feet.
Maybe we'll mix it up each day.
That's it.
Do you want to know a fun fact about mixing up things? You know the Arctic Monkeys?
I do, man.
Yeah, good band. So they went on a TV show one night and they said, you've got to mime it. It's all recorded. They're like, we're not miming it. We're artists. We don't mime. They're like, nah, you have to mime it. And it's all pre-recorded. Yada, yada. They're like, yeah, no worries. So the lead singer went on the drums. The guitarist they swapped guitarists and another guy was singing it, but it was a recorded one. Absolutely took the piss out of him. Hilarious.
I love it.
Not relevant at all to mining, but
Maybe
anyway,
we'll mine
fun
tomorrow's
facts
show,
with that.
mate.
We've got to listen to their first
I'll
two
host in your
albums.
voice.
Now we're talking. Righto, thanks to all our partners as always. K-Drill, JP Search, Terra Capital, Topdrill,
And Anytime
Exploration Services. See, we're even changing the order of those.
Love it.
Just to mix it up for the money miners.
Hootaroo.
Because we love you all.
Hootaroo.
Oh, I've got to go get a fucking banh mi now. I'm starving.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.